Welcome, ladies and gentlemen, to our live virtual online roadshow here with from Swiss Resource Capital, of course, and with Skeena Resources. And you see already on the screen here, Kelly Earle, the Vice President of Communication of Skeena Resources. Hello and welcome and good morning to Canada. How are you?
Good afternoon, Jochen. I'm well. How are you?
Super, perfect. Thank you very much. Aside the thunderstorm we had, but I hope the internet connection works well. We have a lot of people in here today, and this is why I give it a little bit more time that everybody can check in. Let me do first some legal remarks also, which are important. Yeah, first of all, very warm welcome from my side. My name is Jochen Steiger. I'm the founder and CEO of Swiss Resource Capital and also the founder and chief editor of Rohstoff-TV and Commodity-TV. And yeah, great to have you all in here today. Please be advised that, of course, we are recording this, so you will watch or you can watch the replay tomorrow at Commodity-TV. Secondly, we are fully complying to European data security law, Great Britain and also Switzerland, so nobody can see each other, no names, no emails are displayed. And please use the chat function to type in your questions after Kelly's approximately 20-25 minute presentation, as we would love to have a very lively Q&A with you guys. And yeah, things look good. Gold has turned, silver has turned also massively. So this is a great start into the week. Canada had a holiday last week. Today was the Monday, yesterday was the 4th July for the US guys. So everybody is back on work and a lot of people are in here already 70. That's great. And I would suggest that we slowly but surely get started, Kelly. Do you agree?
Sounds good.
Super, perfect. Okay, ladies and gentlemen, Kelly Earle from Skeena Resources. Kelly, the floor is yours.
Thank you, Jochen. So I know we've done this a couple of times with your listeners before, so I'll skip a bit of the intro and we'll get right into what we're focused on right now. And the majority of this presentation will be on our past producing Eskay Creek mine, which we're revitalizing to get back into production. So there's the obligatory forward-looking statements, and of course our property locations. We are located in the Golden Triangle of Northwest British Columbia. Both our projects are located in Tall Tan territory. They're our First Nation partners, and our flagship project is really Eskay Creek, but we will also touch on our Snip project, which is close by, and it's another high-grade past-producing mine that we've also acquired from Barrick. So I probably won't go too much into the board. We're led by Walter Coles, our CEO. He's an investment banker by background. He really transformed the entire company when he joined Skeena almost 7 years ago now. So the entire management team and board of Skeena is all new within the last 7 years. Our most recent addition is Shane Williams. He's our chief operating officer, and he's really taking us from being an exploration stage company to a development stage company. He has a lot of experience putting open pit mines in northern climates into production, which is exactly what Eskay Creek is. So we're pretty excited that he joined the team. Paul Geddes is our VP of Exploration and Resource Development. He and his team have done an amazing job putting the resources together at Eskay Creek, the 5.6 million ounce resource that I'm about to show you. And then Justin Himmelright, our VP Sustainability, looks after all our First Nations permitting, environmental, and it's a huge component of what we do, having two past producing mines in the Golden Triangle. On the board of directors, we're led by our chairman, Craig Perry. He's been our chair now for several years. He's one of the founders of NextGen and EMR Capital and a geologist by background. And then I'll just mention Greg Beard, who's the latest addition to our board within the last year. He was the former head of natural resources at Apollo Global Management. So we're pretty excited to have him join, especially as we push forward as a company and we're about to list on the New York Stock Exchange, which I will get into in a moment here. Mm-hmm. So infrastructure in the Golden Triangle, I've shown this slide many times, but it's really important and worth repeating. The reason we like this area of the world so much is because of the vast improvements in infrastructure since these mines were in production. So Snip and Eskay were quite remote, fly in, fly out, and all diesel powered when they were in operation in the 90s and early 2000s. Since then, the government of British Columbia has spent over $2 billion investing on infrastructure in the north. Highway 37 and the Northwest Transmission Line has been built, which goes all the way up to what is now Newcrest, Red Chris Mine. And then we have 3 hydroelectric facilities right in between Snip and Eskay Creek. So this means in an area that was once very remote and these mines were all diesel powered, we now have access to cheap hydroelectric power. So it completely changes the cutoff grade at which you can mine. And I'll get into that in a second here. So again, brief history of Eskay Creek. It produced from 94 till 2008, produced 3.3 million ounces of gold, 160 million ounces of silver. It's the former highest grade gold mine in the world. It produced at a staggering 2.5 ounces per ton gold equivalent. And because the mine was so remote and the infrastructure was lacking and the price of gold was quite low when this mine was in production, it meant the cutoff grades were very high, anywhere from 15 to 30 grams per ton. It meant anything below that was waste. So our thesis for acquiring this was pretty simple. What material was left behind that was not economic at the time that would be economic now because of a much higher gold price and the vast improvements in infrastructure? And then, of course, we also looked at Eskay from an open pit perspective. It was an all underground mine historically. The government that was in charge in British Columbia at the time in the 90s was not very favorable to mining. So it was seen that an open pit mine couldn't be permitted. Of course, that's changed since then. We've had Red Chris go into production. Galore Creek has received all its permits. Seabridge's KSM has received all their permits. So very different mine frame now in British Columbia, and open pit mines are definitely permittable. So this is our exciting new resource that just came out this spring. This is what our upcoming PFS will be on the back of. So the global resource right now is sitting at 5.6 million ounces, but it's really the total measured and indicated that's important. So that's what's sitting at 5.3 at 4.3 grams per ton. And for the PFS, we're going to be pushing forward with open pit only. So we're permitting from an open pit only. We very much hope there'll be an underground component to the mine in the future, and we'll do some exploration to look at the underground. But for now, we're just pushing forward with an open pit permit. So that's 5.1 million ounces. That's everything that you see in the gold there, which is measured and indicated. And then all the blue dots, pieces of the resource that are left, are the inferred category. So we're busy doing infill drilling right now. There's about just under 300,000 ounces in the inferred category, and we hope to convert that all over to measured and indicated, and that can be included in the final feasibility study, which will be out next year. I'll go through a timeline here in a second. So very excited about the resource that just came out. I'm going to briefly touch on the PEA. This came out in November 2019, but remember, this was based on a much smaller resource. So the current resource for M&I is 5.1 million ounces. We don't yet know what the conversion rate will be over to reserves, but the PEA was based on only 2.7 million ounces. So any way you slice it, we're going to have at least another million more ounces to add to the PFS, but this gives you an idea of the economics for now. So we're producing and shipping a straight concentrate. This is estimated at a 9-year mine life. We think that number will increase. And right now we're producing 306,000 gold equivalent ounces per year. That number will definitely increase. So I think you'll see a step up change. The PFS, you'll probably see closer to 350,000 ounces gold equivalent being produced a year. And then by the time the full feasibility study comes out, we hope to get closer to 400,000 ounces gold equivalent a year. The grades should stay fairly similar at around 4.2 grams per ton, but I do suspect the CapEx will increase. But with the increase in CapEx, you'll also get the increased number of ounces. And it's still a very modest CapEx, and that's because, of course, this is a brownfield site, so we have some existing infrastructure at site. And secondly, we're just producing and shipping a straight concentrate, so we're not producing doré at site, so no need for an autoclave or a BIOX plant. We looked into all those options, but what made the most sense economically was just to produce and ship a straight con, which is exactly what they did historically at Eskay Creek. So I've got the PEA numbers here. We did this at $13.25 gold and $16 silver in November 2019. We'll probably be using numbers closer to $1,500 and $20 silver for the upcoming PFS. And I suspect the after-tax NPV at a 5% discount will go well over $1 billion. I think the IRR will be fairly similar, and the payback should be similar as well. So we're eagerly awaiting the PFS, which should be out shortly. So just to give you a quick overview of the mine plan, it's pretty straightforward. You can see the pits there. There's a conveyor. There's a waste dump. But what I really wanted to point out was the former waste dump and also the permanent tailings storage facility. So those are both natural containment sites, dead lakes, or non-fish bearing lakes. And really excitingly, we just did some drilling at Albino Lake, which is the former waste dump. We did some drilling from on top of the ice this past winter in March. We wrapped up some drilling, And we did about 8 or 9 drill holes. And excitingly, we hit mineralization in every single drill hole. So again, this is the former waste dump. This is where all the waste material went. Remember, the cutoff grades were anywhere from 15 to 30 grams per ton. So that meant anything below that went into this waste dump. So you can see some of the highlights we have there: 6.89 grams per ton gold over 22 meters, 13 grams per ton gold over 13 meters. There's very little water on top of this waste facility, and the mineralization starts just a few meters below that, and it's very consistent. So pretty exciting. We've only drilled a small percentage of the lake so far, so we've got a lot more drilling to go. We're seeing if we can get a barge on there and continue drilling later this summer. So this is exciting. It's kind of like a new discovery. We estimate there's a few 100,000 ounces sitting in the albino waste facility, and we'll look at a way to add those ounces to the mine plan in the future. So for now, as I mentioned, we're pushing forward with the current resources and open pit only, and things like the potential of the former waste dump albino lake here. We'll look at permitting later on. So we would look at doing, say, a PEA update at some point next year that would show the potential of albino lake and also our Snip project, which I will get to in a moment. So, and also wanted to point out the permitted tailings storage facility. This is where all the tailings went historically. It has ample capacity for all the tailings that we currently envision. And most importantly, it's an already permitted discharge point under the Mines Act. So TSFs are usually what takes the longest to permit in Canada, and we already have one. So that's a big check mark in the right direction in terms of permitting. So we'll move on here. Wanted to talk about the near mine upside potential. This is a long section of the project, so you can see the main 21 zones and then the satellite 22 zone, which is to the south of both of the pits. We did a lot of drilling last year. We did about 83,000 meters of drilling, but 90% of that was infill drilling. And that's because the first resource that we put out, over half of it was in the inferred category. And you need measured and indicated ounces to push forward with the PFS and full feasibility study. So we did lots of infill drilling last year. We're in a good place. This is why the majority of our resource is M&I this year, but we've really barely scratched the surface of exploration drilling. So you can see the circle there around the northern pit expansion. That's the main area where we did drilling. Those were all underground resources historically, and with all that infill drilling, we were able to convert that into an open pit, because I mentioned we're doing open pit mining only to start with at Eskay Creek. We've already tagged into some new mineralization. I'll get into a cross section in a second, and we're about to kick off a 25,000 meter exploration program. So this 25,000 meter exploration program is going to focus on near surface targets. So we're going to be looking for areas that are open pittable, like the 22 zone. So there's a lot of areas that, because this was an underground mine historically, they just weren't drilled properly. So our first priority is to try and find some more open pittable ounces that hopefully we could add to the full feasibility study. And then after that, we'll focus on finding underground ounces. And I'll get into some of the exciting results we've had so far. So I'll show you a cross section through the main 21 zones here. These are drill results we did last year. We were doing infill drilling. Those are the 3 drill holes you can see at the top that hit the main mineralization, which is in orange there. You can see the pit limits there. And then below that, we've tagged into 2 new lower mudstone horizons. So the mudstone horizon at Eskay Creek is the main mineralized zone, what carried the 2.5 ounce per ton material historically, and it was mostly mined out by the former operators because it was so high grade. So the majority of our current resource is in the rhyolite horizon, which is just below that, and it's slightly lower grade. It's still quite high grade by today's standards, since our current resources is over 4 grams per ton gold equivalent. But with our drilling in the future that we'll be doing to look at the depth potential, we're going to be looking for lower mudstone horizons. So this is a VMS deposit, volcanogenic massive sulfide. Just means it represents the sea floor. You have hot fluids with the mineralization coming up underneath the ocean floor. They hit the cold ocean water. You get the main exhalative event, and that's the contact mudstone horizon. So we're looking for lower contact mudstone horizons that occurred earlier in geologic time. And VMSs are often known to come into stack sequences. So we've already had some success here. These are some of the underground hits we've had. A spectacular one, 314 grams over 2.21 meters, 12.27 over 6 meters. And then below that, we've hit the ELM, the even lower mudstone horizon, 6.26 over 4.2 meters. Again, these are very exciting targets for us. We do want to follow up on these, but they're not our top priority. And that's simply because they're underground targets. And we really want to focus on maximizing the open pit potential to start. So again, we'll be drilling the majority of the 25,000 meters this summer, looking for more open pittable, shallower targets. And hopefully we'll get to some of these lower grade targets later in the year, and definitely with next year's exploration program. So that's an overview of the geology of Eskay Creek. I briefly wanted to touch on some comparables and also just the spectacular grade of Eskay Creek. So currently with the PEA, we're going to be producing 306,000 gold equivalent ounces per year. This would make us the 5th largest open pit mine in Canada. Once the PFS comes out and then eventually the full feasibility study, we hope to be closer to the 400,000 ounce a year mark. So in between Detour Lake and Meliadine, and should make Eskay Creek the 3rd largest open pit mine in Canada when we get back into production, which is very exciting. And then of course on the bottom, we just have to point out again the spectacular grade of Eskay Creek. So the average grade of an open pit worldwide is 1.5 grams per ton. And Eskay sitting all the way up at 4.2 grams per ton gold equivalent. So it will be one of the highest grade open pit mines when we get it back into production. And lastly, another initiative that we're looking on is lowering our carbon footprint at Eskay Creek. Right now, Eskay Creek is anticipated to be the lowest carbon dioxide producing open pit mine in the world. So the average open pit produces 0.73 tons of carbon dioxide equivalent per ounce of gold equivalent produced. The average underground produces 0.36 tons of carbon dioxide equivalent, and Eskay Creek sitting all the way at only 0.14 tons of carbon dioxide equivalent produced per ounce of gold equivalent. And all the mines that are lower than that are actually underground mines. So there's 2 reasons that it's such a low carbon dioxide producer. Of course, it's the grade. It's quite high grade. So you have less rock and material that you have to use, move and mine in order to produce an ounce of gold. And also it's the hydroelectric power that's nearby. So those hydroelectric facilities are within 17 kilometers. So the entire mine will be run by hydropower, which of course helps to keep that carbon footprint down. Get into a timeline here. So we've had an exciting year so far. We just put out our resource update. We're about to kick off the exploration drilling, but the next major milestone for us is the PFS. And we are on track to have the PFS come out this month, in the month of July, probably closer towards the end of the month. So that's very exciting. And then off the back of that, we'll declare reserves for Eskay Creek as well. We should have continued infill and exploration results come out for the rest of the year. And then that'll lead into the full feasibility study coming out in Q1 of next year. So still on track. We've actually already launched the full feasibility study. So that should be out in Q1. And then of course, we'll do project financing off the back of that. So a couple of things that aren't included on this timeline, which I wanted to touch on, as a permitting charter that we're currently working on. So this will be, it's very exciting, first of its kind. We're working with our First Nation partners, the Tahltan, and also the province of British Columbia, the Mines Department, and the Department of the Environment. And we're looking at creating a permitting charter that we would all sign, and it would basically be a timeline to production that we would all work towards. So our current target to get into production is 2024. Going to be a 2-year build that we would start next year and then continue into 2023 with the target of hitting production in 2024. So we hope to have that permitting charter out within the next month or so, and it'll really be a guide that everyone can see, a public document, and we'll make sure that all of us combined hit all those targets. And then the other thing I wanted to briefly touch on in terms of timelines is a New York Stock Exchange listing. So I'm sure if you're shareholders, you're aware we recently did a 4-for-1 share consolidation, and that was the first step in our New York Stock Exchange listing. So we need a higher share price in terms of US dollars in order to complete our New York Stock Exchange listing. It's quite a process to list, so that was step 1. We anticipate that we'll be fully listed probably the beginning of September. And our drive for that was really to increase liquidity, open up new markets in the Americas. It's a bit more challenging for Americans to buy TSX listed stock. So that's why we're pushing forward with the New York Stock Exchange listing. We think it'll greatly help with liquidity and then hopefully with the share price in the long run. So rollback was share step 1, and the full listing should be done by September. So I quickly wanted to touch on our other project, which is our Snip project. This is another high-grade past-producing mine we acquired from Barrick. We put our first resource out on this project last year. It's currently sitting at 646,000 ounces. It's not very big, but it's quite high grade. It's running about 13.5 grams per ton gold. Unlike Eskay, which is gold and silver, Snip is just a pure gold play. It's nice, clean ore. So we like this project. It's a great little project. We were looking at potentially having it be a satellite deposit to Eskay Creek. But the other option is that Hochschild Mining, who currently has an option to acquire 60% of the project, could back in. So they would have to spend the equivalent of 2.5 times what we've spent in the ground to earn 60% of Snip. They have until October to decide if they'd like to do this. No real indications yet, but Skeena would be happy either way. Either we're carried forward on this project and Hochschild, who's a world-class underground mining company, would be the operators, or we could look at making this a satellite deposit to Eskay Creek. We've already looked at some internal studies about the possibility of combining the two. They're about 50 kilometers apart, so it would be possible to truck the ore from Snip over to Eskay. So no decision yet on what exactly will happen, but I think by October we'll have a decision, and then hopefully we'll be able to unlock some value, because we don't really get any credit for Snip right now. So more to come on Snip later this year. Lastly, I wanted to talk about our relationship with our Tahltan partners. I've mentioned them before. We're really proud of our relationship. We started a mining alliance with our Tahltan partners. We created a nature conservancy with them in connection with 2 NGOs and the government of British Columbia. Earlier this year, we donated one of our projects, Spectrum, and it was turned into a nature conservancy beside a provincial park. So we're extremely proud of our relationship with the Tahltan. They also recently made a $5 million equity investment into Skeena, so they are now shareholders in the company as well. That's the first time they've made an equity investment into a mining company, and we just really look forward to pushing forward with them as our partners on the Eskay Creek project. Lastly, I'll touch on share structure. So 62 million shares outstanding, because we just did that share consolidation, sitting at just over an $800 million Canadian market capitalization. Analyst coverage, we've started to receive quite a bit of analyst coverage. Should hopefully be more to come later in the year as we get the PFS out. We've had a very successful year share price rise, but we'd argue we have a long way to go. The PEA really just scratched the surface of the potential at Eskay Creek. You'll see a lot more with the upcoming PFS. And we're also very excited about the exploration potential, because we have barely scratched the surface of the exploration potential at Eskay Creek so far. So another exciting year to come from Skeena. That's a very quick overview of Skeena and our Eskay Creek and Snip project. So I'll pass it back over to you, Jochen, because I'm sure you have questions.
Yes, fantastic. Kelly, thank you very much. That was great. Yeah, I think you need some water, definitely. So let me see. Okie dokie. Yeah, nice dates we did. What is your cutting procedure for resource calculation if one is necessary?
Sorry, what is
your cutting procedure or procedure for resource calculation if one is necessary?
So cutting, I think I'm going to assume that they're potentially talking about the cutoff grades for?
Cutoff grades might be one thing, or how do you cut the core, probably. I don't know. Because honest, I'm also not sure. Maybe the gentleman, David, if you can precise that a bit. Yeah,
yes,
let's please precise that a bit more detail.
That would be helpful.
Yeah, that would be good. Okay. With higher inflation right now, are you considering earlier financing, as Walter considered in one of the last webcasts?
So in terms of, we did a $57 million raise in April, May, I think that closed. So we're well financed right now. In terms of project financing, so that would be the full financing for the project, we're going to launch that really after the PFS comes out. So we really need the PFS and the metrics from the PFS to really properly kick off the project financing. And we're looking at a mixture of equity and debt, probably more heavily weighted towards debt, because this is quite a strong project with a very short payback period. So we are going to officially launch into the project financing after the PSF comes out and have groups come in and start their due diligence. But a decision on the project financing won't be made until after the full feasibility study is out, which will be in Q1 of next year.
Okay. Feasibility study, and the PFS comes, I think you said by end of August, September beginning, right?
By end of this month.
End of this month. Okay, super, perfect. Because it was also a question I was not sure. Good. Then Aha, now I get a precision here. Do you cut your high assays to an upper limit?
Oh, sure. So, yeah, there is a capping. I apologize. I can't remember the upper capping number, but on any press release, it would say that. But we do also, there's a cutoff grade for the open pit. So we used a 0.66 gold equivalent cutoff grade for the open pit resource and a 0.7 for the, 0.66 overall cutoff grade for the resource. I don't remember the upper top cut, but I know that we have one. But unfortunately, I don't. I have a lot of numbers in my head, but I don't have that one, unfortunately. But any of our press releases would be able to tell you that.
Okay, super. Then a gentleman is asking drill results from Snip in the near future.
Yes, very near future. Actually, we have. They took a while to come in, but they're starting to come in now. So I suspect within the next week, we should have a press release out with more drill results from Snip. It's mostly infill at Snip that we're doing right now because half the resource is in the inferred category. But Snip is a pinch and swell vein deposit. So you can always have some surprises in there as well and discover new veins. So yes, Snip results out very shortly.
Okay, and I have a good feeling that they're also fine.
We're pretty blessed with high grade results from both Snip and Eskay. Yes.
Like it. Then, do you need an approval or a permission to take the ore out of the Albino Lake?
So we don't need any kind of new approval. It's part of the mine plan. It's the waste facility, so it's considered part of the mine. We will have to put it through, I guess, the environmental and permitting process. So we would be talking to the province and also to our Taltan partners, but we've already broached those subjects. But the reason I mentioned we're pushing forward with open pit only first is any material we take out of albino, that's not going to be included in the PFS or the full feasibility. So if you remember, we've only done about 8 drill holes there so far. So we've barely scratched the surface. So we have a lot more drilling to do. I suspect you'll see more drilling from a barge later this year. And then we would look at the potential. And that's why I mentioned we might consider a PEA update at some point next year. If we retain Snip, then we could look at a PEA that would show the potential of adding Snip to Eskay or also Albino Lake. So yes, it would go through the permitting process. Historically, they've drained the lake. So that's something that we would look at doing again. But yes, all of that would be examined, environmental conditions, draining, everything like that. But we don't foresee any issues there because it's already considered to be part of the footprint of the mine.
Super. Then we have a very excited Italian shareholder. Fantastic project, but what could go wrong?
What could go wrong?
Earthquake.
I guess our biggest concern is always the timeline to permitting, because we can push forward as quickly as we want to, but it's not just us, right? We have our First Nations partners. We have the province of British Columbia. And eventually the federal government will weigh in on the EA certificate. So I think that's our biggest concern. And that's one of the reasons why we're working on this permitting charter, to make sure that the province of British Columbia, the Taltan and Skeena are all aligned on a timeline. And then we will use that document to make sure that we stay on track. So that is our biggest concern, is that the timeline to permitting, but we're doing everything we can to make sure that it's as compact as possible.
Absolutely. Great. Then I have a question here. You have drilled so much. We talk about 5.1 million ounces now, which are, let's put it in the play. Yeah. And you are doing now a lot of infill drilling to really upgrade the categories. Infill
drilling is done. So that's what we did. Most of the 83,000 meters last year was infill drilling. Yep. There's only about 260, I think it is, inferred ounces left that we're infill drilling. This year, we're doing that as we speak. The 25,000 meters that we're about to launch is pure exploration, and that's what's going to start within the next month here. So that's exciting drilling. The infill has actually stopped, and we're pushing over towards pure exploration drilling, which will start up.
Super. Yeah, because that was exactly my question. How much more is needed to really do the last or final upgrade so that you can really move to the feasibility study?
Yeah, so in terms of the feasibility study, this final infill drill program, that's everything we need. The exploration ounces, I don't think they'll make it into the full feasibility study, just because once you find exploration ounces, then you have to infill drill it, then you have to do geotechnical drilling, right? Bring it into the measured and indicated category so we can convert to reserves is a process. So All the infill drilling that we're doing right now, that final 300 or 260,000 ounce conversion, all of that will make it to the full feasibility study. So the size the resource is right now is what you're going to see for the full feasibility study, probably around that 5.1 to 5.3 million ounces, and then that'll get converted into reserves. So the final number of reserves will drop. I don't yet know the conversion rate, but it's quite solid. So the exploration drilling that we're doing later this summer, it's probably not going to make it into the full feasibility study, but hopefully it'll show the potential for Eskay Creek. So our exploration teams actually put together a dream list of about 120,000 meters that they want to drill across the project. We're not going to do that all, of course, to start with. We're going to prioritize with the open pit targets. But there is so much potential left at Eskay Creek. They really just drilled shallowly historically. Shallow ounces were cheap ounces. They didn't really drill past 250 meters from the underground workings. So the potential that's left at Eskay Creek is spectacular. There aren't enough hours in the day to do all the drilling we want to do and stay on target to get the mine into production in 2024. So it's another reason why I suspect you'll see PEA updates coming out on Eskay Creek next year and the year into that. That would be based on, either albino, Snip, or exploration potential, because I'm sure we will find something with our exploration drilling later this summer.
Well, definitely. I mean, you are in elephant territory. That should not be the problem. How much it is and what grades, right? Yeah. And I think also with the wish list, it's also maybe a matter of financial availability, because 120,000 meter wish list, it's a little bit of money, I would say.
Of course, we always keep that in mind, and we have to keep budgets in mind, which is why we're starting with 25,000 meters this summer. Yeah, exactly. And also with exploration drilling, you really need to do a small amount of drilling, and it helps guide future drilling, right? We don't know where we're going to hit the next high grade ounces or the next open pit or the next major, mudstone target underground. So you always want to do drilling and exploration drilling in small amounts, take all that data, learn from it, and then go and do your next drill program based on those results.
Okay, super. What is the reason to do a concentrate instead of doré, for example? I mean, I understand it CapEx-wise probably, but yes, also I can imagine for the concentrate, maybe you get a little bit less money than for the doré. But is it a matter of, let's say, security, transportation, easier to handle?
So it's the nature of the deposit at Eskay Creek. It's refractory. It's a refractory deposit. There's no hiding that. And it also has mercury and arsenic in it. There's no hiding that either. It's well known that contact mudstone horizon I mentioned comes with mercury and arsenic in it. We only have about 30% of that horizon left on a tonnage weighted basis, and the rest is the clean rhyolite or below that. So we did a trade-off study before we looked at the PEA. We looked at every possible option: biox, autoclave. This isn't the kind of the deposit that you can heap leach with cyanide. It doesn't work for this type of deposit. And after all those trade-offs, what made the most economic sense was producing and shipping a straight concentrate, which is exactly what they did historically. That got us the highest payabilities. And also one exciting change that we're going to see for the upcoming PFS is the ability to make a higher grade concentrate. So we were limited to a 25 gram per ton concentrate when we did the PEA. And that was, there were clay minerals that were holding the gold and silver. So when we tried to concentrate it higher, the recoveries dropped. Since then, we've done more research on it. We've added what's called a desliming stage, which is another stage to the circuit that takes care of those that takes care of those clay minerals. And so now we actually have the ability to make a concentrate all the way up to 60 grams per ton gold equivalent. So we have the ability to make a much higher concentrate, which gives us a greater payability in the end from the smelters. They want higher grade concentrates. So that's an exciting step. And you'll see those details in the upcoming PFS as well. But yeah, the reason we're doing a con is because it makes the most sense economically. We looked at all the options, and that's the one that makes the most financial sense.
Super. We saw in your numbers and what you have presented, like AIC of $615. Where do you see the real all-in costs? I know it is a forward-looking statement.
I don't know the answer to that, actually, because I have to see the final PFS numbers. But I haven't heard from the team that there'll be a huge change. So I suspect it'll be somewhere similar to that. But might go up slightly, but there should not be a huge change in the all-in sustaining cost.
And then I think it was 306,000 ounces annual production. You said maybe you want to go up to 400,000.
Yeah.
Do you see a massive change in the capex, which was so far $233 million? And I think still, if it would be 300 or 400 million, Jesus Christ, for such a project, that's a no-brainer to me, right?
Agreed. So yes, the capex is definitely going to go up. PEA is a more of a quick economic overview. You don't necessarily go into as much detail. That's why we brought Shane on. He wasn't with us when we did the PEA. He's with us now for the PFS. So yes, we definitely see the capex going up. I see it probably going up about 100 million US. So we'll be over 300 million US. But you are correct. We're going to be jumping also from 306,000 gold equivalent ounces being produced a year to closer to 400. So it'll be a staged process. We had a good problem when we put our resource update out, in that there was about 1 million more ounces there than our engineering team thought there would be. So they weren't quite ready for that when the new resource came out. So that's why you'll see a staged process. The PFS will probably be about 350,000 ounces being produced a year. And then the full feasibility will rejig the throughput and the mill. And that's when you'll get that 400,000 ounces being produced per year. That's our target that we'd like to hit. And with that, we'll go and increase CapEx. But you are correct. It's still a very modest CapEx, considering it'll be the third largest operating open pit mine in Canada.
Exactly. So I can add a question here. You said the timeline for the production is 2024. Any chance that it can start in 2023?
I mean, that would be lovely, but realistically, I don't think so. It's a 2-year build, and the best time to build, because we are in the northern climate, is in the summer. So it does kind of limit your build time. And then there's also the permitting consideration. So
yeah, exactly.
We're going to have a permit partner, but everything takes time. So no, I think 2024 is probably what it'll be.
Yeah. Honestly, I like it to be more conservative, because we all love positive surprises.
There you go. Under promise, over deliver. I agree.
Exactly. Then there is, I think it's a Canadian shareholder. He's asking, remind me what commitment Skeena has to Barrick still.
Oh, so we acquired 100% of Eskay Creek full out at last fall, I think it was. So there's no other commitments. There's no back and right. That's all extinguished. The only thing now is that Barrick remains a shareholder of Skeena. They've dropped just below 10% as a shareholder, and they also have warrants as well. So that's all that's left. Is Barrick is a very large shareholder of Skeena.
Yeah, it's like a financial investment for them now.
Yes, they also have a net smelter, an NSR on the project. So they have a 1% NSR, but we can buy back part of that. So, but no more attachments to the project.
Okay, super. That also brings me to the question with Snip. Hochschild has the chance to go with the 60% option then. And you said, I think October is the date where they have to decide. Yes. So could they also say, we want to buy the whole thing? Would that be possible? Would you do that? Yeah.
That's a very good question. I mean, they could. We haven't started these discussions yet. I know that they're waiting for the results that are about to come out. Listen, we will do whatever makes the most sense for our shareholders, be it hanging on to 40% and being carried, or, you know, if they made an offer to buy out the whole thing, we would definitely look at the offer. But there's no talks about that just yet.
Okay, super. So, but if it would happen, if they would say, no, we don't take the 60% option, you take it as 100%, do you have to pay them then anything, or is there any commitments, royalties, etc.?
Expires.
It just expires. So that would mean that you can say, okay, that's probably the satellite pit then for Eskay Creek.
That's definitely what we would look at doing, is make it trucking the high grade ore from Snip over to Eskay.
Yeah, super. Then there is a question I really like. Barrick is still prohibited from buying Skeena until April?
I'm not
Is there a clause?
No.
Because April, I think, is gone. Maybe April next year. But I was not aware that.
They have a pro rata right to participate in all our financings. Yeah. But they have not yet exercised that right. So no, they would be welcome to trade our stock, but they're holding on. I think they're waiting to see the future economic studies from Eskay Creek.
They wait for $30 per stock.
There you go.
Super. given the fact Q1 2022, your feasibility study comes out, and then I would say, yeah, like, I don't know, poker, show me your cards. I think it looks like a little bit, or maybe somebody goes all in. Aren't you in fear that you are then a real takeover target?
Yeah, so listen, we've already had interest from mid-tiers and majors. We haven't really started in-depth discussions yet, and that's because we just realized we haven't unlocked the full potential of Eskay Creek yet, right? As I mentioned, we just started our exploration drilling. We don't yet know how many ounces are at albino. We have a lot of value to unlock in Eskay Creek before we consider having the project taken over. I mean, that being said, everything is for sale if the price is right. We would always look at offers, but we really aren't going to sell it until we get a price that we think is fair and what that reflects the true value of Eskay Creek. And if that doesn't happen, then we're more than happy to put Eskay Creek into production ourselves. We've got the team to do it, and we're especially talented on the permitting side of things. We've worked very hard on our relationships with the government and the First Nations. So, I mean, in many ways, it makes sense for Skeena to push the project forward to full production. So, of course, both options are on the table right now. If the right price came along, we'd consider selling it, but otherwise we'll bring it into production ourselves.
So would that mean that you have such a strong shareholder structure now that they really stick together and say, hey, you know, guys, not for this price, we want to see the right price?
Yes, we've worked hard on readjusting our institutional shareholders over the last year or so. We have a lot of strong long-term holders who've been participating in several financings, and I know they won't let it go until the right price comes along. So yes, we've worked hard on that, and we all understand the true value of Eskay, and we haven't shown it to the market yet.
Okay, super. Let's come back to your waste dump, because I really love the fact that you have put in 8 holes and each hole hit it really amazingly. And I think you said that it's only like several meters deep, and I think it's only rainwater, right? So it's not like a real lake. It just went through the nature and through the years full of water, right?
It is technically a lake. It's considered a dead lake, an alpine lake. So there's nothing in the lake, and it's a natural containment site. I mean, there's different depths throughout the lake, but the majority of the lake only has a couple of meters above it. You can see the waste dumps if you fly over it, and then the mineralization starts just below that, and it's nice solid chunks of mineralization. And so far, the meterages have ranged from 6 to I think about 15 meters. So yeah, it's very exciting. It's quite high grade. It's like we just found another satellite open pit, essentially. Exactly. I mentioned that it had been drained historically. So Barrick had drained the lake to grade the side. So that's probably what we would look at doing again. But no idea yet on the full size. We need to do some more drilling, as I mentioned, but it's extremely exciting to think about. You know, there's at least a few 100,000 ounces in there of more high-grade material that we could add to the mill at some point later in the mine life.
Yeah, so that would mean that you get out of the waste a free bonus.
Exactly.
That's cool.
There is also potential in the tailing storage facilities called McKay Lake. It's much deeper. It's where all the tailings are. So we will be doing some investigation in the future about what material is left in the tailings lake as well. But that's probably a ways down the road.
Okay, super. I get now here a bit more details about this question with Barrick and April. So 2 gentlemen are referring here. The first guy says that Barrick has March 2022 lockout of soliciting a takeover for Skeena, and the second gentleman says that there was an 18 months standstill from October 21st, closing that prohibited Barrick from purchasing Skeena until April 21st in 2022.
Okay, so they're talking about the original agreement for a takeover bid. That's what that would be about. But they aren't prohibited from buying the stock. As I mentioned, they did have a pro rata right. So they could have, if they chose to, participated in all our financings that we've done. And they have not, as of yet, participated in any of the financings.
Okay, super. By the way, what are the price targets of the analysts?
I think most, since we've done the rollback, are averaging over $5 now. So I think we're right around $3 as we, sorry,
So $20 then, right?
Multiply that by 4.
Yeah, exactly. $5 price target, nobody would be happy.
I think they're ranging
20.
anywhere from about $15 up to closer to $20. Yes.
Yeah. Okay. Super. And the reason for this share consolidation was really that you need a higher price to go onto the NYSE, right? Or the NYSE.
Exchange. Yes, correct.
Okay, because the minimum is $5 there, right?
US, yes.
Yeah, US, exactly. Okay, super. Then there is a question, just wondering how much of the even lower mudstone story do you see coming into the PFS? It feels like this part of the story is being lost.
Yeah, so it's not so much being lost. It's just that we're permitting open pit to begin with. There are not yet enough ounces for there to be a worthwhile underground component. And that even lower mudstone is definitely an underground target. So we did a lot of infill drilling to convert a lot of what was underground into open pit with that northern pit expansion. And yes, we have found those 2 nice lower horizons, but from a permitting standpoint, because we're not doing underground mining to start with, I guess that's probably why they think it's kind of been lost to the story. So we had done initially some exploration kind of all over the project to get an idea of where targets would be. And we did drill some of those deeper drill holes. And while they are amazing targets, we feel that exploration should be focused on surface targets this year, because we're only doing open pit to begin with. You have to put a pin in your mine plan, right? You have to say, this is what it's going to look like, because there's all the permitting that comes with it and the environmental assessment. Yeah. So we can't have, the project be the size it is right now, and then 6 months from now say, oh, and now we want to add all this underground component. Look at all this even lower mudstone that we found. So we would like to do that, but that's not doable. So open pit is really the priority to start with, and then we will look at underground targets. So I suspect next summer is when we would really look at the underground potential and drill off the lower mudstone and even lower mudstone. So we're a bit spoiled for targets at Eskay Creek, and we had to prioritize. And the deep mudstone is just lower down on the priority list right now.
Okay, super. Do you face any risks with the wildfires which are going on currently in Canada?
I mean, there's always risks of wildfires in British Columbia. It's been extraordinarily unseasonably hot. Right as of now, I can tell you we're fine at site. There was a wildfire that came through the general area a few years ago through Tahltan territory. So it's always a concern in British Columbia when it's wildfire season. So yes, we are concerned, but there's no current wildfires in the area.
Okay, so there's again a question to the lower mudstone. Sorry, it just came in and crossed my question. Were there any historic drill results from former operators but showing potential from lower mudstone targets? Was that ever pursued in the 1990s? But I thought they have produced also out of that, right?
So not from the lower mudstone.
Okay.
So the main mudstone horizon was what was mostly mined. There was about a half a dozen or so drill holes that hit that lower mudstone target. But if you think about the cutoff grades historically, 15 to 30 grams per ton, even though they drilled into that lower mudstone, it didn't hit their cutoff grades historically. So no mining is done from there. And there's only a handful of drill holes because they were at a distance to the current underground workings. Price of gold was low. By the time they drilled it, they were wrapping up the mining at Eskay Creek. So they were never followed up on. They weren't even assayed properly. To the frustration of our geological team, you'll find a lot of drill holes that ended in mineralization, but they only assayed, say, for gold. And they left them. They didn't do a multi-element survey, and it just was never explored properly because it was below the cutoff grade target. It was deeper than they wanted to mine. So,
okay.
Very exciting potential for underground in the future.
Super. So future of the future. I like that. Yes. That's great. Let's talk shortly about ESG as you touched it. I understand that it has more to do with the hydroelectric you are receiving. But what are you doing, for example, by electrification of the fleet, stuff like this, emission savings?
We've actually just started looking at that electrification of the fleet. This is something we really want to do. We want Eskay Creek to be a green mine and on all aspects. So I don't know the answer to that just yet. I know that the PFS is set, but I know that we do have some targets to meet for the feasibility study, and electrification of the fleet is one of them, along with connecting to the hydro facility. So those are both high priority targets, and keeping a low carbon footprint for Skeena. That's on the environmental side. On the, the social side of things, we've done some pretty exciting things with our First Nations partners and the local community. I mentioned that we created that nature conservancy. Tall Tan are also investors in Skeena, and we have a Tall Tan mentorship program. So we have 6 Tall Tan university students and recent graduates working for us across all disciplines. So I actually have someone on my communications team with me who's an intern for the summer. We have mine engineers, environmental scientists. So we are working very hard to help create the Tall Tan leaders of the future at Skeena, and they're part owners in the project. So we want to make sure they're involved in all aspects of the mine life.
Yeah, fantastic. Very important question. What is cash in the bank? Are you financed for the feasibility?
Yeah, we are financed through the feasibility. So we did 57 million in the spring here. I think cash balance is probably sitting at about 50 million right now, because we haven't officially launched our second drill program, which is probably going to be the 25,000 meters will probably be about 12 to 13 million. So we are fully financed through to the feasibility study. I cannot say if we won't do a financing again before that. As I mentioned, we're looking, we might bring forward some of the CapEx and some of the build. That's one of the things we're looking at. So we are financed the feasibility, but things could change as they always do in the exploration and development stage game. So finance for now, but we're not revenue producing, so we will be financing again in the future.
Yeah, and also as my feeling is that gold can easily go to 2,300, 2,400, maybe even this year. Your stock price would also move a lot, and then it would make sense to say, hey, you know what, let's grab another whatever 40, 50 million, and then you can start with long lead items and stuff like this, right?
Exactly.
Super. So there is a new question popped up, because everything is answered so far. Does the tabular nature of the deposit argue for conversion from reserves to proven and probable, make it more probable comes in near the high end of the usual 65 to 80% range?
So I think they're talking about the conversion of M&I over to reserves. So yes, it does help. The very tabular and consistent nature of the ore body representing the seafloor will help with that conversion rate. I don't yet know where that will fall in, but it won't be at the 65 end. It'll be closer to that 85 end that they're talking about. And yes, it's the nature of the ore body that helps to do that.
Okay, super. Then there is a question again to the listing in New York. Does that mean new shareholders and financing?
Does it mean new
shareholders and the financing maybe through the US entities?
We haven't talked about a financing when we do the New York Stock Exchange. That's not on our list right now. Again, things could change if there are shareholders interested, large institutions, but there's no immediate plans to do a financing upon the New York Stock Exchange listing. Okay, super. Let me check again on my list, because we have really gone through all questions here. That is fantastic. Just to make sure that I'm not missing somebody. So first fund manager says, thank you very much, Kelly. Great job, just to tell you. Okay, that looks good. Yep, and also my list here. Maybe a stupid question, but there are normally no stupid questions. You have 4.2 grams gold per ton as an average, but we see all those super high grade results. So from where does that finally come? Do you have to blend to make sure that you have a better processing, that you have a higher recovery rate? How do we have to understand that? Yeah, so our grade is very much related to where you are in the deposit. So if you're in that mudstone horizon, it's higher grade. And then it drops once you get into the rhyolite horizon. So for us, it's going to be, we're going to start mining in that high grade mudstone horizon in the 21 zones for faster payback on capital, which means that we might be averaging, say, 350 to 400,000 ounces a year, But at the beginning of the mine life, we'll be producing more than that, because we are going to be starting to mine in the high grade areas of the contact mudstone. And then it'll trail off into the lower grade rhyolites, which means that it'll be front loaded. So more ounces produced at the beginning of the mine life, and then fewer towards the end. And that's because the grade is very much based on where you are in the horizons of the mine.
Okay, super. So then really all questions are done. And here it's also done. Kelly, thank you very much. It was a great, almost an hour. Fantastic. Thanks for the presentation. Thanks for answering all those questions. Oops, there is a lot. Oh, now, I pushed the button here. Is the waste completely barren, or could lowering the cutoff grade move some material from waste to ore on higher prices or reprocessing later in mine life?
No, definitely. It definitely, if gold prices keep going up, then we would drop that cutoff grade, and some of that waste would definitely be converted to ore. Yes. Okay, super. If Skeena decides there is sufficient value in albino and the TSF, what is the plan for the new waste produced? I don't have answers for that yet, because we've just scratched the surface. That's a great question for the engineers. For right now, we're sticking with the original mine plan, which is tailings would go into the existing tailings storage facility, and then a lot of the waste we would look at stacking at surface this time. So everything was stored subaqueously historically. This time around, we're looking at dry stacking some of it and putting some of it underground or under the lake. So no idea yet on if the tailings. Too early. No, yeah, just too early to tell. Okay, super. There's again the question: how many ounces do you expect to produce per year then? So our target with the feasibility study is to hit 400,000 gold equivalent ounces per year. Yeah, perfect. Super. All right, then we are done. Kelly, thank you very much. Wish you all the best. Stay healthy. That's the most important thing these days. And hope to see you soon, and wish you a great summer. As I can imagine, you have maybe also a little bit time off, and make sure that you are not catching the wildfire. Nice to talk to you, Jochen. Thank you. Super. Thank you very much, Kelly. Yeah, ladies and gentlemen, that was our live virtual roadshow with Skeena Resources and Kelly Earle, the Vice President of Communications. And I think what a great story. Jesus Christ. This is fantastic what they have. Eskay Creek will be definitely a mine production in 2024. $57 million by now in the bank. And maybe they want to raise some more when the stock prices are higher, which makes always sense as they are not yet producing. And so from that side, I would suggest that you really have a very close look onto this fantastic company. And make sure you grab some, because this will definitely be a fantastic and large mine in Canada, maybe then the fourth largest in Canada. And to be honest, this will be hyper profitable, and this is what we want to see, and this is what the markets are needing. So thanks for watching us today. Wish you all the best. Now it's a little bit of a summer break with our virtual roadshows. 24th August we will move on then again with Ridgeline Minerals. Wish you all a great summer. Stay healthy. Make sure not to catch any corona or any other virus. Relax a bit, because I think the last 18 months were really tough. And all the best, and bye bye from Switzerland. Thanks.